So as expected, the ECB cut interest rates again at their September meeting by 25 basis points, bringing the policy rate to 3.5%. What's been interesting about this easing cycle for the ECB has been how stable expectations have been. Both going into this meeting and coming out of it, we continue to expect that the ECB will be on hold at their October meeting and then cut by 25 basis points again in December. But that stability in the rates outlook looks to be a little bit at odds with what could be the beginnings of a quite significant shift in the macro undercurrents. And what I mean by that is we're seeing euro area growth underwhelming, undersurprising, coming in significantly weaker than both we and the ECB had been expecting. And if you look at the subcomponents of that weakness, it's really coming from weak domestic demand. Moreover, sentiment, both household and business sentiment in Europe, remains weak. That doesn't bode well for the outlook. So there's an increasing risk that over the ECB's forecast horizon, inflation could in fact fall below its 2% inflation target. And if that risk were to crystallize, we think there's a growing probability that the ECB could really pivot its policy position when it gets to its December meeting and start to signal significantly more aggressive rate cuts, particularly in the first half of 2025. For now, though, we continue to see a cautiously cutting ECB with limited and gradual rate cuts for the remainder of this year.